lows from last year. Let's get some perspective now from Alan Nuckman. He's the chief market strategist at Bullseye Option, joining us to make sense of some of this recent volatility. What do you say, Alan? What have you been observing?
Well, number one, volatility is opportunity. You want the markets to move. Now, I just take what the markets give us, and nothing has changed as far as the fundamentals go, or even interest rates. We'll talk about that in a second. But if you look, this is a healthy pullback. Every other time the markets pull back, it's rallied and made new all-time highs. Every time in market history, I don't think it's any different. Nothing's changed. It just happens to be that we get into this kind of pattern as we get into earnings season. Earnings season starts in 2 weeks, and a lot of times that stabilizes the markets.
And so if you're looking for those pockets of opportunity in a period of uncertainty, what have you been thinking about?
Well, I'm always a big fan of tech. We've seen multiple times where tech has pulled back 10%. Now it's off 5% off its recent highs. I in particular do like Micron. MU, it's a stock that's actually unchanged in the last 52 weeks. Compared to the NASDAQ, which is up nearly 20%. So it's been stalled here at the 70 level. 70 is also the halfway point of the action that it's seen in the last year. So from a risk-reward standpoint, I like that particular stock. But I'm very bullish on the market in general. Like I said, there's still a lot of positives. In earnings, they're expecting earnings growth rate at 28%, which is actually increased from their estimates of 24% that they had at the end of June. And the PE in the marketplace, let's remember, that's what the market is all about. The PE has actually declined to 20.8 forward-looking from 21.4 in June. So the market price is coming down and earnings going up. You know, that's very optimistic.
I just want to bounce one story off you, which came up in one of our earlier conversations today, and that is China. And are we going to find ourselves, as we sort of get into the final quarter of this year, having a deeper conversation around what kind of recovery China is experiencing? Is there a possibility that if it's just not as robust as what we had hoped for, and obviously they're dealing with a lot of uncertainty there right now, that that could eat into that E you were talking about in the PE?
I don't know. I mean, China's been a story since I've been a trader. And, you know, whether you believe the numbers that they produce or not, you know, they've been on an upward trajectory, as have we. Now, their stock market and our stock market were almost lockstep for many years until the last couple of years. So, yeah, there's a decline there, but I look at that as probably an opportunity. I'm very bullish. This has been a global stock market rally and recovery. So that's, you know, it comes down to the simple equation. We talk about this every time, that money has to go somewhere, and the choice is still the stock market versus looking at these yields in treasuries. Even looking, you know, at the Fed and the dot plot, and if you compare that to what the futures markets are telling us, we're not getting any rate hikes until December of 22, and at the end of 23, that'll bring us to a whopping 0.75% in the short-term rates. And then if you go out further than that, it gets really interesting, because we're not going to have rates, you know, above 2% till 2026, and that's where they top out in 2030. So, you know, short-term rates, the markets are telling us not to be worried about rising rates.
And we were doing, Alan, a breakdown of which sectors here in Canada outperformed over this quarter, where I think, you know, the headline will be a little tougher for the broader North American indices because of what happened in September. But you've got energy and a lot of stocks, left for dead stocks, if you will, in the Canadian market that had this huge rally as oil prices went up. It's kind of interesting now, because on the one hand, that excites energy investors. On the other hand, the higher the price of oil goes, the more stories you see about how that potentially could put the global recovery into a slump. How are you viewing the commodity trade right now?
Well, I've always used oil as a barometer of economic growth. So higher oil prices are very much a positive for us. So let's put in perspective where we are. Oil is around $75. From 2007 to 2014, oil traded above $75. So that didn't put any crimp in the economy. That didn't put any crimp in the stock market. And this comeback in crude oil from 73 down to 61 and a full V recovery, that target's 85. The last time we were at 85 was 2014. So the energy sector has been the one sector that has not played ball in the last few years. Now, so that was an opportunity to, you know, have a little bit of a rubber band snapback. and it's estimated it's going to have the largest earnings increase of all the sectors here for this quarter. So, it's a positive in my opinion, and we've seen a lot of stocks, the Halliburton, the COP, the Occidental, a lot of these stocks and sectors have, energy sectors have come back, and that's a positive for Canada, obviously. And we can also talk about natural gas. Natural gas went from 3 to 6, but, people were thinking natural gas was free a couple of years ago. And we got to remember, we were at 6 in 2014, we were at 15 in 2005. So, it's just I would say it's not so much a demand situation, and even though demand for natural gas is increasing because of warmer temperatures and air conditioning. But we've got supply bottlenecks all over in America and all over the world, and that's what's driving a lot of these prices up. And I view it as temporary.
One final one for you, Alan, because you're on a roll here. I just want to come back to tech. I just saw an analyst this morning upgrade shares of Microsoft, which is basically in line for an 11th straight quarter of performance. You're looking at tech as an opportunity, but there's the big ones, and then there's the ones that are maybe a little bit more volatile. We only have about 20 seconds, but when you look at tech, are you looking at the biggest names and some of the ones that were under pressure from the beginning of September?
Yeah, Microsoft has been obviously a leader, and I'd probably look at some of the laggards. So again, I would come back to, I'm looking at MU, but some of these AMD also have had a pause. So I think there's an opportunity in this tech sector, unless you think it's different this time, and I certainly don't.
Okay, great perspective as always. Alan, thanks very much. Alan Nuckman, Chief Market Strategist at Bullseye Option, joining us. We're going